It's about that time of day again. My name is Joseph. It's Monday evening, August 28th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is bearish and trying to retest today's low, but we have a stingy rising support trend line making our job a whole lot more difficult. Tells us to wait for buyer failures up in the battle zone or look for some traps down near the lows tomorrow. The S&P just got clobbered with a monster gap down at the overnight open, but today's session ended with a triangle. So we're watching to see the sellers try twice for buying opportunities back into the range tomorrow. If not, we're watching last week's low for a target for the sellers. The Nasdaq is also bearish after a big gap down this evening, reacting to some missiles being fired from North Korea, which tells us to keep our eyes open for clues such as acceptance or rejection to help us plan our trades accordingly on Tuesday. Gold is bullish with a spike in channel, telling us to look for a deep two-legged pullback down to the battle zone for a target going back up to the triple up waiting overhead. And of course, the euro is bullish and trying to break free of a triangle, which tells us to avoid chasing the move higher, waiting for the two-try rule, seller failure below the moving average for a retest of the high. We have some breaking news that just hit the headlines. We don't have a lot of major news tomorrow, but we got some great gap opportunities setting up Tuesday's session. We'll get a bunch of gaps in the chart tonight. I'm going to put together that strategy here in just a few moments. Before we jump in and talk about the gap strategy here for tomorrow, I want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on social, lower left-hand corner, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice. Follow me throughout the week for charts, updates, and links throughout the week. And don't forget to grab those charts right below the video tonight, below the video on the blog, right where it says click here to download today's charts. That's right. How easy is that? Grab those charts in tonight's video and have them ready on your computer for tomorrow. And whatever you do after you finish up this video tonight, make sure you grab that free pass over here at sidewaysmarkets.com. Grab that free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you have any questions, hit me up on live support. I'm always here to answer your questions 24/7, 365. Hope you guys had a great weekend. Last few weekends of the summertime season. Speaking of the summertime season, let's jump in and talk about this last full week of the month of August. That's right. We're going to September 1st. That is this Friday, September the 1st. And of course, with the first day of the, with the first Friday of the month, we have the employment number staring us right in the face on Friday morning. Let's talk about this here because we had a lot to talk about here for tonight. First of all, as we go into the end of the month, 28th, 29th, 30th, and 31st. We talked about this briefly last time on the newsletter. What do we always think about as we go into the end of the month? More volatility and prior month levels, Those are the two things that come to mind when I think of the end of a month. Anytime we get towards the end of the day, end of the week, end of the month, we see greater volatility. So as we start looking at Thursday this week, that will be the end of the week, So the end of the day on Thursday, end of day, end of week, end of month, So volatility should start kicking up tremendously here as we go closer to the end of this week. Now, it's also heading into the Labor Day weekend, So a lot of traders will take off on Friday, Saturday, Sunday, of course, being the weekend, and next Monday, September the 4th, is Labor Day. So when you toss in the end of the week and the end of the month, come Thursday into Friday, you're also going to be looking at the end of the week, and that volume be drying up ahead of the holiday weekend. So we have a real good cocktail, A cocktail that, when you shake it up a little bit, it may definitely explode later on this week. So end of the month, as we get closer to the end of this week, we go into the end of the month, increased volatility. As we get closer to the end of the week, right, increased volatility. As we go into the holiday weekend, what happens? Lower volume. Now, what happens when volume is low and volatility is high? Yeah, illiquidity, right? So it becomes a much more dangerous environment. The bottom line is we are definitely expecting to see a little bit more of the shenanigans that we saw earlier on tonight. I'm going to grab those charts in just a moment. We get some big gaps, some big moves overnight. So we're probably going to see a lot more of that as we get into the end of the week. So end of the month, right? Holiday weekend coming up. Again, a lot of traders will take off on Friday. And of course, Monday is the holiday. So watch, right? So watch closely here as we go towards the end of the week. The big news of the week is going to be that employment number, right? Friday morning at 8:30 a.m. We'll talk more about that as we get closer and closer, right? Later on this week. In the meantime, now you guys know the plan here for the week, right? So really this week, get to it early, make your money early in the day, make your money early in the week, because as we start getting into Wednesday afternoon, I would assume a lot of people are looking at that long weekend going, you know what, I could probably take Thursday, Friday off, right? So you're probably going to see Wednesday afternoon kind of be a shift into that pre-Labor Day weekend, kind of holiday weekend as we go. We're going to talk more about that as we go through the rest of the week this week. I just want to make sure you guys know the big picture, right, for the end of the summertime season. Now, tomorrow, we don't have a lot of major news tomorrow, right? There's not a lot of major news on the calendar. You know, if you're in Europe tomorrow morning, trading London, you got a little peppering here, the home price index, you got some GDP, right, in Europe tomorrow morning, but really nothing to really get too excited about. And then, of course, we got the Case-Shiller home price index, consumer confidence at 9 o'clock and 10 o'clock tomorrow. You know, again, I don't think you're going to see that really move the needle very much tomorrow. I think tomorrow will be another one of those days where, depending on what happens here, we just heard about this missile launch from North Korea. That will probably litter the headlines overnight and be on everyone's minds for tomorrow. And we may see tomorrow very much a continuation of what we saw today. You know what I always remind you though, right? We're going to come out tomorrow morning and we're going to do it tomorrow in our trade room, 8 o'clock Eastern time. So if you're wondering how to make sense of this, I'm going to do a pretty good job tonight with our strategy for tomorrow. But again, don't forget 8 o'clock Eastern time tomorrow. We always join together with all of our advanced members in our trade room. Let's get this party started. We got a lot to cover here tonight, and I know I'm a little bit late to the video tonight, but we had that gap down. Oh boy, once Globex opened up, all hell broke loose. I had to go update my charts and everything, so I'm a little bit late here tonight for you guys, but I thought it was better to do it that way, right? Better to be late than to be wrong. So anyways, bottom line is we're starting off tonight with crude oil. We'll go crude, S&P, Nasdaq, gold, and we'll wrap up on the euro. We got some pretty perky markets here setting up for Tuesday's session. So crude oil first. Crude is bearish and trying to retest today's low, but we have a rising support trend line telling us to focus on selling high or wait for a trap down near those lows. The bears are clearly in control. This is not a bull market. The bears had a strong move lower today, which tells us that any pullback off these lows will likely be seen as a selling opportunity back down to retest the low. The real challenge right now is this kind of just pain in the butt rising support trend line. This rising support trend line really is not a very nice tool for us here right now. It's not really steep. It's kind of flat, which means it's going to be difficult for these sellers to get through it. So really at this point, the goal is to use overhead resistance, such as that prior week low or that battle zone, to avoid selling too close to that trend line, or we have to wait until we get below that trend line, right, for additional selling opportunities with traps. Now, this is the only chart tonight that does not have a gap on it, right? So we're going to talk about gaps and the gap strategy on the S&P, Nasdaq, gold, right, euro. So stay tuned for that. This is the only chart out of all these markets here tonight that does not have a gap. It did actually start with a gap. There was a gap here that started off the session today, but that was quickly filled thereafter. So I'm not going to address the gaps on this chart, right, but we will coming up very, very shortly. So stay tuned for that. Now, as you can see right now, where the big picture is, we got 1, 2, right? Pretty much 3 legs down. If you followed last week's newsletter, right? This is phase number 1 of those 4 phases. Now we're going to phase 2. We're trying to attract more sellers to sell high, and phase 3 is they want to get back down to retest that low. If you missed the newsletter from last Wednesday evening, it was called The 4 Phases of Trend Following. You definitely want to make sure you check that out, and you'll know more what I'm talking about there. Or again, don't forget, we teach all this stuff, right, in our trade room every day as well to all of our clients. So strong move down. The bears don't want to sell down here. They want to sell nice and high with the target going back down to retest that low. The big problem right now is this little 2-legged correction, right? That creates that rising support, and that rising support is really kind of a stick in the mud right now. A lot of times rising support is either really steep or it's really shallow, and it can be easy to trade around that. This one's not going to be very easy. So here's what we have to worry about. First of all, I don't want to sell into that rising support. So I have to either get up and get away from it, or I need to get through it, be careful not to sell too close to that low, and then try to use it as a level of resistance to sell back down. So there are ultimately 2 scenarios we are looking for right now. As we talked about last Friday on the newsletter, or last Thursday night into Friday's session, we're looking for the 2-try rule right now for a selling opportunity. 1 try, 2 try, and then sell back down in. Now, this is not drawn to scale right now. Unfortunately, I can't predict the exact future, but we do know, though, is it needs to be up around that prior week low, up around that battle zone. I'd like to get, again, let these buyers try once, let them try twice, and then once we start seeing those buyers fail the second time, then we know, right? We're off the races, back down to retest that low. Take a piece of profit off at that rising trend line, and the rest of it comes off at that low. Now, what if we go lower here? The hard part is we just trapped above this 81, right? Beautiful trap. Now, there is enough room right now, but as you probably have already learned, this is really overnight trading right now. I wouldn't recommend selling it here. I'd wait a few hours, see how this market develops, right, and then go from there. So the bottom line is trying to sell this trap high right now. I'm not really a big fan of selling it at this point, right? I'm filming this at 6:45 p.m. Eastern time. So I'd rather have is, again, 1 try, 2 try back down, or let's get through it, right? Don't sell low, and let's look for that little trap high, right? Anytime I find myself in a position where the only option is to sell low, what do we always look for? We always look for traps. Right? Always look for that trap. Traps are easy ways to avoid selling low or buying high. They require that 2-legged, right, trap above that prior swing. And hopefully we can use that trend line as resistance. Now, one last thing here. How do we turn bullish? Oftentimes, I'll tell you, oftentimes these rising support trend lines, they do just enough to intimidate those sellers, right? In other words, they do just enough to keep the sellers from selling into it, right? Price jumps up. If the buyers can hold that pullback, what are we talking about? We're talking about 3 things, right, for reversal: strength, pullback, and strength. If we see that strength, pullback, strength, if we see these buyers are pushing to new highs, 1 leg, 2 leg, in other words, if the 2-try rule, 1 try, 2 try, if that second attempt is successful, then we now know we have our own bull market on our hands here. We'll find a bull channel. Right, that bull channel, we'll try to buy that dip, right? Buy that dip, use those levels of support down here, right, to buy that dip. And the goal would be to go back up and retest today's high at 48.20, right? 48.20. So again, sell it high, don't sell it low. 2-try rule definitely in play here for the bears. 1 try, 2 try, and then back down, or traps, right, up. Just make sure we're not selling into that low. If we can get back down to that low, again, the buyers, right, the buyers have it easy, right? The buyers trying to get back up to retest today's high at 48.20. The sellers are trying to go down to retest that low at 46.15, and then from there, we'll look for acceptance or rejection, right? We talk about that quite a bit on our nightly newsletter, looking for acceptance or rejection, right? If we see If we see that move back down to that low and rejection, this then becomes a trading range. Sell high, sell high, sell high, sell high. If we see acceptance through it, if we run through it, then of course that acceptance takes us down to that triple down target at 45.29. So right now, as I always remind you guys, there's one objective right now, and the objective is to get back down to retest that low. If the buyers can hold 1, 2, it'll gladly turn bullish. Again, that rising support trend line will definitely make it easier, right? But again, remember, if those buyers fail, that price can right back down to retest that low. Let's keep going here about some S&P. Now, I had this video all queued up and ready to go for you guys and gals, right? And then blammo, right? Market opens up 6 p.m. Eastern time, right, in Asia, and all hell breaks loose. Well, turns out, right? Turns out our good friends in North Korea have been firing off their old missiles over there here this evening, and obviously it's difficult to say that's the exact reason why, but I would imagine that, yeah, I'm going to say that's probably the big reason why right now. I think they've got Hurricane Harvey well under control. Obviously, spoken as somebody who is in a warm, dry climate in Los Angeles, California, right? I am not in Houston, Texas. I am not on the beach, right, in Texas right now. So excuse my ignorance on this. But from what I can see in the obviously, right, inflated news media, and I'll tell you right now, if there's one group of people on this planet that can handle a good old rainstorm, that is the beautiful state of Texas, right? So I'm not worried whatsoever about the amazing Texas people, right, handling this little inconvenience right down there for them. Again, all respect due. I know it's raining cats and dogs right there, and I know life could be a whole lot easier right now for all my Texas friends out there. But obviously, from what I can tell, a lot of rain, right? A lot of damage, obviously, but I don't expect anything but success, right, from our friends, right, in the great Lone Star State. So other than that, right, I would assume this is all coming from. Long story short, I assume they're reacting, right, to this missile test, right, from North Korea. The bottom line is, let's jump in. Now you guys know more about it. So we got a bunch of gaps we're talking about here for tomorrow. The S&P, obviously, tonight, we'll go S&P, then we'll do Nasdaq. S&P is range bound with a triangle, but this recent gap down tells us to wait for more information before trading tomorrow. Today we talked about gaps, right? Gaps most often get filled, right? That was number one. Okay, we just don't know when they get filled, right? Most gaps will produce some sort of spike, right? That spike in channels, spike in range, spike in, right, fill in the blank. We talked about that, right? And also don't forget, we're looking for rejection or acceptance, right? Rejection or acceptance. So wait for that 2-try rule to see if that gap can hold, right? Those are those 3 secrets or those 3 aspects of a gap trading strategy. You want to learn more? Come out and join me real quick here. Free trial on the home page of the website. I know you guys are busy right now. I'm running late here, so thanks for your time on this. But don't forget, if you want to learn more about this, join our free trial. We get a great free trial on the home page of the website. If you're on our YouTube channel right now, there's a link in the description of that YouTube video. Follow that link over here to the website at schooloftrade.com and make sure you join our free trial. You will not be disappointed. And don't forget, we have beginner, intermediate, and advanced levels of membership. I think we are the cat's pajamas when it comes to professional trading education, right? I've had the privilege of teaching this to thousands of successful traders in my career, and I hope to get my hands on you as well. My name is Joseph. It's great to have the chance to work with you. I look forward to teaching and trading with you every day in our trade room. Keep in touch. I'm always here to help. If you hit me up on live support, I will answer the phone. We'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, same time, same place tomorrow evening. We'll do it all again. All right, guys? If you're in flood territory, again, as I mentioned earlier, right, kick some butt out of Harvey for me down there, will you? I have no doubt in my mind the amazing, what could be the country of Texas, right, will take care of themselves. But you guys know we're definitely thinking about you guys, our friends and family down there, right, in Southeast Texas. If not, right, definitely send your support there as well. And again, be well out there, be nice to each other, and be here tomorrow. Adios, amigos. Bye-bye.